Hey guys, and welcome to the Working Money Channel. So XRP Veteran on Twitter, that's XRP_veteran, sent me this tweet yesterday. I wanted to get to it and make a video specifically about this. And it talks about the IMF and how they're warning that banks essentially need to evolve or they will be left behind. This is basically a do or die situation for the bank. So first of all, thanks at XRP_veteran for sending me this tweet. I always love it when you guys send me stuff. And I want to get into this because I know I've mentioned it in previous videos. Essentially what this means is that banks are at this point in time, with Facebook's Libra coin, big tech companies coming out now challenging the system. Banks are at their mercy. Banks essentially have to adapt or they will die. And we have heard this narrative, again and again from prominent people in the space, the IMF. Christine Lagarde, has mentioned that this will shake the system. I want to read this article here. So this is from CNBC. So mainstream media, okay, not just a cryptocurrency news outlet. The IMF warns banks to evolve or be left behind amid competition from big tech firms. So let's read this. Banks must evolve or risk being left behind as big tech companies shake up the financial system, according to new research from the International Monetary Fund. So in a paper published Monday titled The Rise of Digital Money, IMF authors Tobias Adrian and Tommaso Mancini Grifoli said the two most common forms of money today, cash and bank deposit, will face tough competition and could even be surpassed. But banks are unlikely to disappear as they face growing threats from big tech companies and fintech startups, the paper says. Guys, banks aren't going away anytime soon. In a lot of ways, they are just too big to fail. That might be another topic for another video, but let me continue here. Some will be left behind, no doubt, the author wrote. Others will evolve, but must do so quickly. Guys, in this kind of circumstance, when you're faced with a company like Facebook, who has, billions of users, or a couple billion users at least, and they have resources up the yin-yang. Now, banks are obviously very rich as well. They're worth billions in some cases. But now you're up against another behemoth, Facebook, who has the user base and a lot of money. And if they want to get into a space, by golly, they are going to get into a space. Think of companies like Amazon and Apple now rivaling Netflix for content, right? For streaming platforms. And Disney is now going to release one as well. So actually, Disney's not that great of an example because Disney was already in the entertainment business. Apple and Amazon are actually better examples of that, looking to challenge Netflix, looking to create content as well and go toe-to-toe with them. This is the same kind of thing now with Facebook, but it's an unusual circumstance because Facebook has never been in the banking business and now they're looking to challenge banks. And people are realizing this now, okay? People in the space, in the financial world are realizing this. So this point here, very important. Some will be left behind, no doubt, the author wrote. Others will evolve, but must do so quickly. The research was published as central banks and policymakers debate the role that tech companies and digital currencies will play in the banking and payment system. Facebook's announcement that it will launch a cryptocurrency called Libra has been met with skepticism from many officials around the world. In congressional testimony last week, Federal Reserve Chairman Jerome Powell said Libra raises serious concerns around privacy, money laundering, consumer protection, and financial stability. And again, some people are saying that this is just code because, ultimately, policymakers should be prepared for some disruption in the banking landscape. The IMF paper said traditional banks have certain advantages over tech competitors, such as the ability to raise interest rates on deposits. Libra, for example, says that it will not offer any interest to users. So the banks are stating that this could be one advantage to use a bank rather than Facebook for your banking needs. But the paper also said big tech firms and fintech startups are experts at delivering convenient, attractive, low-cost, and trusted services to a large network of customers. Herein lies the challenge. Banks are in the business of doing banking. Sometimes the banking experience isn't that great. Social media has really worked to make our experience great with them. Okay, despite a few privacy hiccups along the way. So pros and cons on both ends here. I wanted to get back to that interest rate thing. They're saying that one of the pros that banks do is that they give interest to users on deposits. I don't know if you guys know this, but in some cases, In countries that are having a lot of financial difficulty, a negative interest rate could occur, which means that a central bank and perhaps private banks will charge negative interest. Instead of receiving money on deposits, depositors must actually pay money regularly to keep their money in the bank. Okay, this happens in a lot of countries where the economy is just in disarray. We haven't really experienced this too much in the Western world, but this does happen, and it is happening today. So don't be fooled, guys. Your bank could turn around and charge you negative interest rates at any time. So another pro for Libra or Facebook, I suppose. Nevertheless, the IMF has been examining the role that central banks might play in issuing digital currencies. In a CNBC interview in April, then IMF Managing Director Christine Lagarde said disruptors in the financial sector, including crypto assets, are clearly to have an impact on incumbents like traditional banks. So how are Ripple and XRP going to save the day for traditional banks? Well, first we have to understand the world we live in, and I saw this here. More Americans say that they don't carry cash, and in fact, in an average week, roughly 3 in 10 adults say they make 0 purchases using cash. Okay, so more and more we are using digital forms for transacting, whether that be credit card, debit card, not holding hard cash in our wallets. Those who do carry paper money around have less than $50 in their wallet, maybe just for some incidental purchases, maybe a coffee here and there, something that's a few bucks. Right? You go to the convenience store, I can think of a bunch of reasons why I would carry cash and just, buy those little things, right? You're no longer buying $50, $60, $70 items with cash. Sometimes people buy their groceries with cash. Obviously, this is a generational phenomenon as well. This infographic, it's from a Chinese news outlet. The average amount of cash carried daily, and so it goes generationally. So people born in the 60s, people born in the 70s, people born in the 80s, and people born in the 90s. And so you can see that decline very prominently. Okay, that from this article here, is China ready for a cashless future? And guys, this is becoming more and more of a reality around the world. I know China's very technology progressive, so in a lot of ways, they've already been living in a cashless society. Not completely cashless, of course, but it is apparent, however, that in China and other Asian countries, they're already using smartphones and other digital methods to do most of their day-to-day transactions. I noticed this. My wife is Swedish. We went to Sweden back in 2016. Okay, in 2016, so 3 years ago, Sweden's cashless experiment. Is it too much, too fast? This article was from February 2019, but even back in 2016, we noticed many people were not using cash, okay? And I think the trend has just been growing over the years. Down here, it says in 2018, only 13% of Swedes reported using cash for a recent purchase, according to a nationwide survey, down from around 40% in 2010. Okay, so 13% in 2018, down from 40% in 2010. Guys, that's a huge decrease. Again, I think it's generational. The thing that really hit me the most was when we went to, my wife's cousin took us to this Swedish flea market. You go to a flea market, you might find some interesting antique-y kind of things that you want to bring home. Usually those kinds of places deal in cash though, right? So we're going to this Swedish flea market, and what we were seeing is, the typical kind of thing that you would see in North American flea markets, I suppose, right? Just tables set up kind of in a field with old antique stuff. You might find a deal here or there, and the prices weren't outlandish. They were similar to the prices that you would see in the United States at typical flea markets. But what we noticed was people were paying with this specific cash app, and I think it was exclusive to Sweden only. I don't remember what the name is for the life of me. If there are any Swedish people watching this video and you can remember what that cash app is, maybe they don't even use it anymore. Yes, they were transacting in cash, but every table at that flea market also had a sign that said you can also pay via whatever that thing was, and here's my code. So kind of like cryptocurrency in a way. Obviously, it didn't settle instantly. It was more like a PayPal type thing, but it was for Swedish citizens only. Guys, all this to say that the banking industry really does need to make changes, and they are going to be in trouble unless they act fast. And it really didn't dawn on me until about a month and a half ago, essentially around the time that Facebook's Libra coin was announced. I don't remember exactly when that was, but whenever that was, it dawned on me. Now the focus is on Facebook and Libra coin. They are going to be the ones that are going to challenge the banks. In 2018, there was always this narrative, within the cryptocurrency space, within even the XRP community, could Ripple challenge banks? Could Ripple be the one that really turns the industry on its head? And there was opposing views on that. Ripple could do it. Ripple could release an app that could send money cross borders in an instant. They could wipe out so much of the banking business right now. But Ripple is smart. They're not doing that. They're not as cocky as Facebook, in my opinion. They are not going after the bank's business. What they are doing is complying with regulators, making sure they have the technology ready, in place, completely compliant, so that banks can roll it out right away once regulations occur. And this is going to be the saving grace for the banks, because now they're faced with Facebook's Libra, blindsided everybody, I think. Banks are going to have to do, as they say in here, evolve or be at the risk of being left behind as tech companies shake up the financial system. So if banks don't want to lose their customers, what are they going to have to do? They are going to have to adapt. But they don't have the time to create their own blockchain, to create their own way of conducting business. What are they going to do? They're going to license Ripple technology. It's already there, prepackaged, ready to go, meant for the banks. Here's the product you need to use. It's all ready for you. Your peers are already using it. It's an interoperable system, which is also very important. And this, my friends, is Ripple's ace up their sleeve. Mass adoption will be forced on the banks because of the likes of Facebook and Libra. And who's gonna come out to save the day? None other than, you guessed it, Ripple. But guys, that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.